Auto Shanghai, the biggest car show in the world's largest automotive market, opened this week in a vast new exhibition center with 16 massive halls. The facility is so large that you almost need a car to get around it. The phrase on everyone's lips at Auto Shanghai this year is the, quote, new normal, or the Chinese government's phrase for slower overall economic growth of 7%, if not even lower. As a result, multinational companies anticipate that automotive sales in China will grow by less than 10% for the first time in many years. But that is still exceptionally good by global standards.
If we are in the higher single-digit numbers, I think that would be something we would consider being a very strong growth on any other market, and I think that's probably the new normal, that you have to accept that single-digit growth, higher single-digit growth is high growth.
I think it's not such a major issue. It's still a growth. Of course, we were used to play with a two-digit growth, which was good for everybody, but at the end, 7% is something which makes everybody dream. So I think we can handle it without any difficulties.
Consumer demand is strongest in the SUV and compact premium segments, such as Mercedes' locally produced 3 Series. One of the most successful SUV makers is the UK's Jaguar Land Rover, a unit of Tata Motors of India. JLR's China sales have increased more than 10 times over the past 6 years, but there have been a few bumps in the road for JLR, whose chief executive complained at Auto Shanghai about a Chinese company's alleged copycat version of the Range Rover Evoque, which is produced at a brand new joint venture factory near Shanghai. But with sales of premium cars increasing 8% in the first quarter over the same period last year, China is now well on its way to passing the US as the world's largest market for the premium segment as well. Tom Mitchell, Financial Times, Shanghai.